Morning everyone, and welcome to another RF Crypto video. Today's markets have seen another decline of about 16%. The global crypto market cap is now standing at close to 1.2 trillion. Bitcoin is down by almost 12%. Ethereum is down by almost 22%. And we have seen a depegging of Tether after a very, very long time. We have seen UST, which is Terra USD, depeg, and now it's USDT's time. It's not such a massive depeg, it's only depegged by 1.76%. In comparison, UST depegged by about 50 to 60% in about 2 or 3 days. USDC seems to be doing fine, the reserves are holding up pretty well. Solana is down by 32%. Your meme coins such as Dogecoin and Shiba Inu are down by massive amounts, 30, 35, 40%. Terra USD lost its dollar peg, and from $1 it went down to about 0.3, and now it's trading at around $0.47. A coin which has essentially collapsed is Terra. It was as high as about 110 at one point, and now it's trading at 0.06. And this is due to the massive injection of coins into supply. We see that the circulating supply is 3.45 billion. This has been injected in the market to try and get it to burn in order to bring UST back up. However, it has had unintended consequences with demand declining and supply increasing by rapid amounts. We have seen its price essentially collapse to nearly zero. It is quite sad to think about it because a lot of people have lost quite a bit of money trading this currency. Just looking at the last 7 days, it was about $80. And now it's lost almost 100% of its value. Looking at the price of Bitcoin, yesterday it was trading between 30 and 32,000, its support and resistance levels respectively. However, Bitcoin managed to break down below this $30,000 support level, $30,000 being a psychological level whereby whenever it reaches this level, the price tends to go back up or it tends to stabilize there. However, the markets are in a precarious position. We have seen Terra's UST depeg, we have seen Luna collapsing to nearly zero, and that has caused even further panic in the market because Terra was one of the top 10 coins at one point, and this has caused the price of Bitcoin to go even down because people are now de-risking. They're removing basically Bitcoin and Ethereum and other cryptocurrencies from their portfolio, massively selling off. If you can see this trading volume down here, this constitutes a massive sell-off. Essentially, people are removing money from crypto and they're probably keeping it in cash or investing in stocks and bonds, which are safer at the moment. And it's just a matter of seeing where this will move. There are predictions that Bitcoin will go down below even this level, and points of max pain is between 15 and 20,000. I don't know if it's going to reach that low, but as I said yesterday and the day before, there isn't enough money in the market now, or enough free money in the market now to bring back the prices up. There isn't enough money to just pump into the market and bring the prices back up with excess demand. It's going to be a lot more suffering, and it's not going to be as simple as in 2021 when we got a bull market straight after a long-term bear market. It will take a lot more than that, and it will be a lot more painful. So USDT's dollar peg wobbles as markets continue to struggle. Cryptocurrency markets continue to suffer major losses following the depegging of Terra's ecosystem stablecoin UST. So another stablecoin, or the biggest stablecoin in the world, which is USDT, also showed some signs of stress as USDT to USD traded at under $0.99 on major exchanges. Now it's about 0.98, so it's essentially lost its peg. However, Tether and Bitfinex CTO Paolo Ordoino took to Twitter to assure holders of USDT that over 300 million USDT tokens have been redeemed at their $1 peg over the past 24 hours, giving some sense of security in the sense that people are still trading USDT at their $1 peg, and it's not something to worry about. It's just market stresses causing the prices of USDT to go below the $1 peg. The last time this happened was in March 2020 when the pandemic hit, and it has necessitated another massive shock to the market to depeg USDT. And the CTO states that Tether continues to process redemptions normally amid some expected market panic following yesterday's market. And in spite of that, Tether has not and will not refuse redemptions to any of its customers, which has always been its practice. So Tether has always promised that for every USDT in circulation, there is $1 in the treasury as a backing for its users. So if any of its users want to redeem their USDT for $1, they can easily do so. And this kind of like the gold standard back in the day, where for every currency unit you had, there was an equivalent gold amount in the treasury or in the reserve bank that you could get if you went to the bank with your note and you get your gold back. So it works in quite similar ways. And another thing that reassures USDT users that it won't follow the likes of UST is that unlike algorithmic stablecoins such as UST, Tether holds a strong, conservative, and liquid portfolio that consists of cash and cash equivalents such as short-term treasury bills, money market funds, and commercial paper holdings. So what this basically means is that algorithmic stablecoins use smart contracts in order to burn Luna so that it maintains the peg of 1-to-1. However, USDT maintains its peg by having reserves in its treasury. So if there are $50 billion worth of USDT in circulation, then Terra as a company has to have $50 billion worth of cash and cash equivalents in their treasury to back whatever is in circulation. And this is what brings confidence to the users, because they are assured that whatever they're holding in their wallets in terms of USDT is being backed 1-to-1 by the company that issues these stablecoins. And it obviously is a fact that the collapse of Terra's Luna and its algorithmic stablecoin Terra USD has sent shockwaves through the market. The relationship between the two was fairly straightforward. Users could exchange $1 worth of Luna for 1 UST or vice versa. However, this system clearly failed when the price of UST fell below $1 peg, leading to a massive amount of arbitrage trading, where traders burned UST for $1 worth of Luna, which was then sold for a profit. So they took their $0.48 worth of UST and burnt it for $1 of Luna, creating this arbitrage opportunity of almost 60%. However, the continued selling of Luna led to its value plummeting, not only cancelling out the arbitrage opportunity, but increasing the amount of Luna in circulation while the prices continued to crash. So this continued selling of Luna in order to get these profits led to its price going down. And the way that Terra tried to control the price of Luna or stabilize it was to print more Luna or mint more Luna in order to burn it to get USD back to its $1 peg. However, because the selling pressure was so high, the supply kept on increasing while the demand kept on decreasing, and the prices collapsed to less than $0.1. And now everyone is fearful, investor sentiment has taken a big knock, and people are selling off their cryptocurrencies. So the depegging of UST has had repercussions to the whole market, seeing a collapse of the whole crypto market by almost 50%. And relating to UST, Janet Yellen highlights Terra collapse in call for stablecoin legislation. She said that stablecoins need to be regulated this year because they do provide innovation, but they also present risks to the financial systems. Increased and coordinated regulatory attention is necessary, and obviously the US government has been keeping an eye on stablecoins for a while, and the Biden administration has been working to bring stablecoin issuers under the same regulatory regime as banks, which obviously makes sense because stablecoins act like a currency as they're pegged 1-to-1 to the dollar. So you have to treat them like a currency. You have to treat their holders like banks, because people treat USDT, UST, and USDC and other stablecoins as normal currencies. So if they hold a large amount of it and there's no regulation to control it, what happened to UST can happen with any stablecoin in general, and people will lose all their money. And not only that, it will bring some sort of instability to the markets, which are already precarious as we speak. So regulation for stablecoins is very important, and they want to have it by the end of this year, which makes sense in order to prevent something like UST from happening over and over again. On some positive news, Germany won't tax Bitcoin or Ethereum sold after 1 year of possession. So Germany's Federal Finance Ministry issued the country's first guidance on the income tax treatment of cryptocurrency. The sale of acquired cryptos like Bitcoin or Ethereum is now tax-free for individuals after 1 year of holding the assets. Before, it was 10 years, and this has been reduced by 1 year. And according to Parliamentary State Secretary Hessel, the German government is already working on a supplementary document that will focus on the cooperation between the federal states and their commitment to the cryptocurrency issue. And what they mean by the cryptocurrency issue is that cryptocurrency is an ever-evolving industry which is in need of regulation. So they'll keep an eye on the industry and they'll see what new regulation needs to be in place in order to protect the people, in order to protect the government, and in order to ensure that the environment for conducting business in this industry is conducive. And the rest of the world should take note at how Germany is tackling cryptocurrency legislation, as it's very, very conducive, it's very positive. They're embracing cryptocurrency instead of shunning it and making it seem like it's some sort of evil that has bestowed upon the world. And they know that blockchain is a technology of the future, and instead of shunning it, instead of cutting it out like other countries, they're embracing it in a regulatory manner. They're regulating it in a way that is beneficial for everyone. And I think that with the United States being the biggest economy in the world and wanting to implement regulations relating to cryptocurrencies and stablecoins and all of these new technologies, they can take a page out of Germany's book on how to do it correctly, on how to take steps to make it a hub for crypto and blockchain. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Thank you, and invest wisely.